Hello everyone, this is Ming Jong. Welcome to another episode of the Daily Market Analysis for the S&P 500 E-minis futures for the session of 22nd of October. In this video, I'm going to share with you the market recap from yesterday's session and also a trade review that I've done in the 3 minutes time frame, which I will include the entry, the exit, and also the rationale behind. And in the trade review section, I will explain in detail how to actually trade the reversal by just detecting the trend changes by looking at the telltale signs that often overlooked by a lot of the traders. So do pay attention to that. And going forward, I will cover the bias and also the levels that I'm watching in the current market outlook, and together with my trading plan for the session later. Alright, so let me just get started. Okay, so another day passed by. So yesterday we have kind of a doji bar and a bit of the bearish day with still very consistent of the supply level. So this is definitely not looking great, not bullish at all. And if you recall in my video yesterday, I do talk about that we definitely need to rally above the immediate resistance at 34.50 to 60 in order to switch it to the bullish candle. So far, there's a lot of the rejection out from the resistance level and also reflected in the volume as well. Let me just get down to the hourly time frame, and you can see it a lot clearer here. So in my video yesterday, I do talk about potential short entry once we see some rejection near somewhere around 34.50 to 60, because first of all, if we just take the horizontal level, then we see quite a few rejection. So yesterday we have another rejection out from this resistance zone. So you can see that I kind of mark up the trade here. So I had a trade out from this resistance zone, and you will see that a lot clearer when I walk you through in the 3 minutes time frame. But before I do that, let me just finish off this market recap. So first of all, you can see that there are a few things that stands out. So the first thing definitely is the rejection from the resistance level 34.50 to 60. So previously has quite a few rejection, and also you can see that we have this increasing of the supply level. So that's the increasing of the supply. If we compare it to the previous session, definitely there's increasing of the supply. So I believe that's in this two bearish bar. So that's right after we attempt to break above, but immediately see the reaction as shown in this two bearish bar. Actually, I think 1, 2, and 3, those are the 3 bearish bars. So especially the last one, we have seen the long rejection tail as well. And so apart from that, prior to the US session, like during the Globex period, we have seen a very weak rally up, tested the resistance zone again, and followed by a reaction. So pretty much that is stuck within the immediate trading range from 34.30 to 34.60. So that's the trading range, and during the US session, it's kind of showing a lot more supply and followed by a very weak close. So it's almost, I think, clear at the low there. And in the morning session, the Tokyo time, and we have seen a breakdown. So definitely not a good sign. So I will talk more in the market outlook section in the later part of the video. Now let me get down to the 3 minutes time frame, and let me just walk you through how I trade the reversal and detect the changes along the way by just using or uncovering all these telltale signs that often overlooked by a lot of the traders. Alright, so here is the 3 minutes time frame. So let me give you a bit of the context first. So just prior to the session, It's a US opening session. Prior to that, we have seen during the Asian time zone, so some rally, and then tested the resistance zone, followed by a reaction during the London European session. And when the US market opens, then we have this kind of a very strong rally. So it looks very bullish with a big bullish bar and continuing to the upside, and until we hit the resistance level or resistance zone at around 3450 to 60. So here is the rejection shown up. So that's the order rejection tail, supply tail, and followed by a break of this upsloping small range and inability to rally, and then eventually we have this confirmation bar failure. So that actually confirmed the downtrend. So we have a downswing. Alright, so you can see that I have marked up my trade. I have two entry here. So this is the early entry. So at this point, my gut feel is about probably 60%, 70%, because it hasn't really showed a confirmation. So right after we went through this small trading range, it just kind of increased to 80%, and right after the breakout, then I can pretty much confirm it's going down. Alright, so let me walk you through now. Okay, so in order to trade the reversal, so first of all, definitely this is kind of the counter trend. So this is a very clear uptrend. So we have an uptrend, and you can see that the volume is great. So we have consistent demand, but look at the first change. So we have seen a bit of the rejection tail shown up here, and definitely this is the climatic run-up. So the movement is a bit climatic, and that immediately followed by this bearish bar. So this is the first sign. So this bearish bar actually is the kind of the change of behavior. So it means that we are in some different environment. So something is changing. So right after this bar, you can see that we're no longer in the straight uptrend, keep going up. Instead, we're entering into a sloping, upsloping trading range. So we're changing from this uptrend into the trading range, but the trading range is kind of a upsloping range. So this kind of pattern, like I mentioned in quite a few of my videos, is quite a bit annoying because this grinding up action can last for a while, because it just can keep on grinding and grinding and grinding, so until it actually fails, or what's worse, it just continue to the upside, so start another trend. So that could happen. So it's very crucial to actually identify the exact signal to enter short. Otherwise, it will be kind of early entry. So let's say that if you just enter right here at this at the close of this bearish bar, it's probably like a engulfing, the bearish engulfing bar engulf this previous candle. So to some people, maybe this is good enough for the short entry, but not to me. So this is only the first sign that kind of change from this uptrend to, I will just suspect, a trading range. So in fact, it's a trading range, but it's kind of the upsloping type. So you know that the gradient is changing. We have the very steep gradient to this kind of a little bit of the gradient turning up. And subsequently, I spotted this second bearish candle. So that comes with an increasing of the supply. So at this moment, I know that within this part, this portion here, there is presence of the supply. So this is going to work in my favor because I'm betting on this resistance zone, 3450 to 3460, and it's quite a natural place for the price to have some reaction. So I'm betting actually a reversal to start from here. So now I have this resistance zone, and I know that there's presence of the supply just based on this 2 bar with increasing of the supply. Now I just want to wait for some kind of the signal or confirmation. So here comes the confirmation. So right after that, you can see that the volume kind of dropped out a bit. So it's kind of maintained the low volume section, but it still keep grinding up, and until we broke down from this upsloping range. I did not really enter after the first breakdown bar because I just see that there's some demand behind, and just look at the volume here is kind of, well, quite normal, like the previous volume. So I just wait for the next bar. So the next bar is very interesting. So first we have seen the attempt to go up, so that you can see the rejection tail here, and that comes with a slight increasing of the supply, and eventually we close near the low, and definitely is close lower than the previous bearish bar here. So this is a good sign for me, so I just enter one position for me, ready to break to just ride the trend to the downside. But at this moment I still want to wait for some more confirmation. So that confirmation actually come through right after this trading range. So we have another trading range here, but look at the volume here. So we have this kind of the trading range with some increasing of the volume or the demand behind, but look at the results. So the results did not really take us to anywhere, so not even overcome the high of this breakdown bar. So this is another good sign for me. It shows that the market doesn't have the ability to rally with the increasing of the demand. So that suggested that there is even quite a lot more supply entering in this range. So lastly, that's the confirmation bar. So the breakdown bar, I just, right after the close of this breakdown bar, I enter another position to the downside to short the market. So the first position is quite early, and the second position is right after the confirmation. So this is exactly how I deduct the trend from uptrend to stopping the uptrend into a trading range to breakdown, which could be the start of the downtrend, to this trading range confirms more supply presence until the confirmation bar, which I can confirm, yes, it's going down. And in fact, yes, right after the breakdown, then we have seen a very quick movement. So I just use my trailing stop and just trade it to the downside. I think kind of get stopped out at right at this candle here, the bullish bar just stopped me out, and that give me very good reward to risk ratio of about 3.1. So very happy about the reward to risk ratio. So you can see that this sell down actually comes with an increasing of the supply, which further confirm that there is definitely a lot of the supply and the trend is bearish. And right after that, we can see that we have another technical rally up followed by a test, and we have seen a spike of the volume here, which is quite interesting. But eventually you see that the shadow actually just stopped right at the breakdown area here, and immediately we have seen another correction or another reaction to the downside. But still, it kind of respect the previous day low, I guess. So that's the day low that I mark up, so the orange line. So depending on your strategy, you probably can play it from around the support level as well. But lastly, it just closed at the low, so this is definitely a bearish sign. And let me get down to the hourly time frame and let's talk more on the current market condition. So right now, I think we just broke down from this support level 34.30 or 34.20, something around there. So that's during the Asian time zone, the Tokyo time, very early morning, and subsequently have another test. Now it's kind of inching up a bit. So the rally currently unfolding is still very weak at the moment. It doesn't really not even touching the resistance level, so prior as a support now will become a resistance level. So this is the first level that you need to overcome, 34.30. And if we can't, definitely there will be a lot more to the downside. And if you can, then still I think that we need to pay attention to the resistance zone at 34.50 to 60. And if we extend to the downtrend line, so it's still going down, so let's see how far it can travel. Maybe you can just go to hit the 34.50 level again, and that will be coincide with this downtrend line. If the market is even weaker, then definitely I think it will just kind of test the 34.30 level and then have rejection. Then that could present a nice short entry. And for the immediate support level, as per my video yesterday, it still doesn't change. I'm still looking at around 3380 to 3400. So this will be the immediate supporting range, and I think this will be very critical, because if we break this, and definitely I think we're going down to test the low here, 3200. So I think this will be the very critical level. Of course, we'll still have some level below, maybe 3300, and then eventually 3200. So far, my trading plan will be for the session later will be at the key levels 34.30, to see whether you can have some rally to 34.30. Then I'll need to see how you actually interact with the resistance level. So there's potential short entry. Otherwise, the breakout trade could be considered as well. So I'll just need to see how the price reacting. This is the end of the video. Hope you enjoyed it. If you'd love to learn more about the technique to increase your winning rate, definitely check out the video shown on the screen, and do remember to subscribe to my channel so that you get instant notification of the future video ideas. Thanks for watching. I will talk to you soon. See you.